Welcome to my Accounting 1120 cash flow statement. In this Pangcast, I want to talk about some general information that will help us with our cash flow statement. This piece of general information regards the cash flow from operations or from operating activities. That first part of the cash flow statement can be prepared using two different formats. You'll get the same number because cash flow from operations will end up being what it is, but you can prepare it in one of two ways. One is the indirect method, and the other is the direct method. We learn the indirect method in our chapter. So we're going to learn to prepare cash flows from operations in the indirect method. There's a few simple steps on how to do that. The first step is that you list net income right off of the income statement, and then we need to correct it because net income is accrual basis and we want to make it be cash basis. To do that, you need to fix it for two things. So you need to, first of all, add back any non-cash items. And there are only a couple that we've learned. Depreciation is an expense, but it doesn't use cash. Depletion is an expense, but it doesn't use cash. And amortization of things, those are expenses that don't use cash. So we would add those back. So we first list net income, and then we add back any non-cash items, which I've listed, and we add them back, not because they generate cash, but because they don't use cash, and we subtracted them from net income. The next thing we need to do is eliminate any gains and losses that might have been included on the income statement. Let me give you a quick example. Reaching way back in your head to chapter 10, let's say we sold a piece of equipment. It cost us $10,000. We depreciated it $4,000. So 10 minus 4 is our book value, $6,000. We sold it for $8,000. If you have $6,000 tied up in something and you get $8,000 out of it, you get a gain. That entry would have looked like this. First, you need to get rid of your equipment for $10,000. You would need to get rid of your accumulated depreciation for $4,000. Just going down, taking my accounts off. Pick up your cash for $8,000 and record a gain of $2,000. This is the entry that this analysis led to. When you were doing the indirect method of cash flow from operations, which is what we're doing, you have added that $2,000 gain into net income because it's part of net income. You need to take the gain out, so you need to eliminate the gains and losses. So you would subtract that from net income to get rid of the effect. In our case, it'd be $2,000. You subtract it out for two reasons. First of all, the cash is not $2,000. The cash is $8,000, and it doesn't belong in cash flow from operations. Where do you put a sale of your own assets? And the answer is that belongs in cash flow from investing. So we're going to learn how to do cash flow from operations on the indirect method, and that has this list net income. Add back non-cash items, subtract any gains or add back in any losses because they're in the wrong section. And then the last thing we do is pick up the change in any current asset and current liability accounts. So we'll adjust it for that, whatever that might be, and that will give us the change or cash flows. Cash flow inflow from operations under the indirect method. So to come up with cash flows from operations, there's a few steps. list net income, add back non-cash items, eliminate gains and losses, and then calculate the change in current assets and current liabilities. So that's how you do the cash flow from operating section. I want to address a little bit why look at current assets and current liabilities in more detail. Those are the accounts that typically change when you're working with net income. Let's look at some transactions that lead to net income. We have a sale, accounts receivable and sales. Whatever that is, it affected a current asset. We took out cost of goods sold and inventory. Whatever that is, inventory is a current asset going down. We need to look at the change in it. How about we paid wages expense? Or we accrued at wage expense and wages payable. Working with net income numbers and expense, again, a current liability. The accounts that change when you're recording net income are typically current assets and current liabilities. That's why we look at those when we're doing cash flows from operations. And remember, we're going to do our statement on cash flow from operations on the indirect method, which says list net income, add back non-cash items. Number 3, eliminate gains and losses. And number 4, capture the change in current accounts, and that'll give you your change in cash flows from operating activities. Still fuzzy, but let's keep going.